putting a lid on oil production to raise prices. Half the world's producers met in Qatar's capital to talk about restricting supply. Some stayed away, so do the talks matter? And what are the risks if production levels are not capped? This is Inside Story. Hello, welcome to the program. I'm Hazem Seekab. It is in almost everything we use, from the screen you're watching this on to the toothbrush you used this morning. And while consumers benefit through lower petrol prices and energy costs, leading oil-producing nations are suffering from the dramatic fall in the price of oil. Our ministers have been meeting here in Doha to discuss a possible production freeze. They hope lower output will cause prices to rise and revive government budgets, which rely on oil revenue. Ministers met against the backdrop of rising tensions between Saudi Arabia and Iran, who don't see eye to eye on much, including oil production levels. So will the production freeze go into effect? And even if it does, will it have the desired effect for oil-producing nations? A lot to discuss with our guests, but first, Bernard Smith sets up the story for us.
This meeting in Qatar comes after one also held here in Doha back in February. Then, Saudi Arabia, Russia, Venezuela and Qatar agreed in principle to the idea of freezing oil production at January levels in the hope that would at least stabilise the price of oil. Back then, oil was around $30 a barrel or just below, and since that meeting, the price of oil has gone up to around $40 a barrel, and around 60% increase. So this meeting was essentially to try and seal the deal on what they'd agreed in February. But missing from the picture is Iran. Now, Iran says it's not prepared to freeze production because it's only just had sanctions lifted, and already in March Iran was producing 400,000 barrels a day of oil more than it was in January, and the Iranians say that they want to get production up to $1 million a barrel. So the Iranians have not been taking part in this meeting in Doha, but all the oil-producing countries have been feeling the pain in the drop in the price of oil, and all of them are interested in some mechanism that will help stabilise the price of oil. Bernard Smith for Inside Story in Doha.
Iran's oil minister likened the production freeze to self-imposed sanctions.
The Doha meeting is for those who want to sign the plan to reduce output. If we wanted to send someone, it would have been to show support for the decision. But as we are not going to sign anything, and as we are not part of the decision to freeze output, we ultimately decided it was not necessary to send a representative. We can't cooperate with them to freeze our own output, and in other words, impose sanctions on ourselves.
Our countries hope the production gap will help global oil prices rebound from their dramatic fall. In mid-2014, oil prices were around $100 a barrel. In January, they had plunged to around $30 a barrel. And the price drop has been good news for consumers who've enjoyed cheaper petrol prices, while airlines have saved billions of dollars in fuel costs. It is the opposite story, though, for oil-producing countries, especially Nigeria and Venezuela. Their economies have been devastated by low oil prices, which are also squeezing wealthy Gulf states, too. Oil producers are hopeful about the impact of a production freeze. Prices have already been boosted in anticipation. Well, for more on this, let's bring in our guests. Kamil El-Harami joins us from the meeting in Doha. He is an independent oil analyst. In London, we have Cornelia Meyer. She is an oil and gas specialist and CEO of Meyer Resource. And lastly, John Sfakianakis joins us from Riyadh. He is the Director of Economics Research at the Gulf Research Center. Good to have you all with us. Now, Mr. Kamil El-Harami, let's start with you, since you are where it's all happening there. What is the sense that you're getting out of these meetings, and what do you expect to emerge from it?
I sincerely hope that we will have an agreement, a communique from the producers later on today, or maybe immediately, that they will call for a freeze on the production level of January of this year. a follow-up meeting in October in Moscow, and a monitoring committee consisting of 2 members of OPEC and 2 of non-OPEC. This is the best, I think, the best scenario we should envisage, or we can envisage, so in order to give a signal and to strengthen oil prices, to maintain its strength, to maintain its stability at the level, at the $40 level and above, hoping to reach 50 by the end of the year. This is a very important element. This is very important. This is very crucial to all producing countries. Non-agreement, it really would lead to collapse of oil prices early morning tomorrow in Asian market on Monday, and then it will linger to other countries, to Europe, to continent, to Europe and to America. So it's very imminent, it's important to have a communique, a positive communique from the people that are countries gathering today in Doha.
Cornelia Meyer, how do you see this, and what impact will Iran's position have on this? Them saying that they don't want any part of oil production freezes right now.
Well, I'll first go to Iran and then I'll go to the macro picture. Iran, you can understand Iran, they want to up their production by 1 million barrels a day. I don't think they'll do it as quickly as they thought they will, but they will up the production because they say we've had sanctions, we need to do something now. You can understand the Kingdom of Saudi Arabia, who says, look, we only agree to a freezing production at January levels if all OPEC members and all the big other producers are in there, because the Kingdom, frankly, has had bad, got quite bruised in 2008 when OPEC decided to cut production. The Kingdom adhered to the cut in production. Everybody else didn't really cut production, and they were sort of, as we say in England, left holding the baby. So it makes sense for them, in order to protect market share, to say unless Russia and all the big OPEC nations agree and adhere to it, it doesn't make sense. Now to the meeting and the impact on price. I think in the short run, yes, our colleague in Doha is right. It will impact on price because it's very psychological if they cooperate or don't cooperate. Materially, I don't think it will matter that much, because what is happening is that we see the shale oil production in the US coming off. We also will see, as so many international oil companies have invested much less money, $500 billion less over the last 12 months only, that you will see less production. So you will see production going down, which will then in the end eat into the storage. And the IEA has forecasted last week that on Wednesday, that in their oil report, that they see the picture turning, and that we will see less overproduction, and actually as of second half of this year we will see a deceleration of accumulation of stock, and even a lowering of the stock levels.
John Sfakianakis, your take on this, and could Iran's decision to stay home dilute the impact of any potential agreement here?
I think that the market understands clearly that at this point Iran is not going to be participating because there are maximizers of supply. So clearly, knowing that Iran is not going to participate, last Friday we didn't see a significant sell-off in oil. Actually, oil dropped initially by 3% when they announced, the Iranians, that they're not joining, and then it closed by 1% or thereabouts down. So I think the market is pricing in quite well that Iran is not going to participate. Secondly, I think that there's going to be some kind of a consensus. And there's going to be a consensus where eventually Iran will have to participate. For the time being, all the OPEC and non-OPEC countries agree that they have to show that there is some kind of uniformity in view and opinion. Thirdly, and definitely, we're seeing that supply is less in the global market, and that is quite important because in the second half of the year we're going to see also demand picking up a little bit, especially from places like China. The Chinese growth story is going to be more positive. As a result, we will see oil prices going upwards, and the supply issue is going to help that story. So I think there are a confluence of indicators that are helping the countries that are meeting in Doha to appear more consensus-oriented. At the end of the day, Saudi Arabia does not want to see oil in the 20s, nor does Venezuela and Nigeria, which is really suffering.
Camille Harami, I mean, we mentioned there that this idea of the prices of freezing production was something that was first floated back in February, and since then prices have risen just on that talk. So even if they don't come to any kind of formal agreement on this, just the fact that they're still talking about freezing prices at some point in the future, might that continue to bring prices up?
Yeah, yes, but it is essential, because what I'm saying is that if there is no agreement, if there is no adherence, then it becomes a useless meeting. So it becomes an exercise, we don't want to see an exercise. We want to see something tangible, regardless of Iran and its noises. Iran is always making noises, and they know the Iranian. They cannot increase their production all of a sudden. It's going to take time. And so why don't you give the time? That will take. Iran will get its share, but not at this moment. So why is they are making the noises? But coming back to, as I said, it is essential, it is very important that we end up with a communique. Failure is not on the board. It shouldn't be there on the table today, not tomorrow. I think we have 3 days, and we've been preparing for this meeting since February. So I think we should have done our homework, and we should reach a very nice communique, very nice compromise from all participants in this meeting today.
Cornelia Meyer, I mean, John mentioned there the impact of China, and China's economy has been slowing down quite a bit over the last couple of years, and it is one of the biggest consumers of oil. Just taking a more long-term view of this, what impact will that have on oil prices overall, regardless of what these oil-producing nations decide?
Well, there's two things. One, China will keep on producing. There's a lot of the growing middle class will want cars. These will be gasoline-powered cars. So yes, they will keep on producing. I always say oil is an OPEC commodity, not a CAPEX commodity. So you need it for day-to-day operations. The other thing is, don't forget India. India's consumption rose year on year 16%. Gasoline consumption was up 21%. So India is really a big factor there as well. So yes, demand from emerging markets will grow, the Turkish, the Indias. Also, the supply is coming down. You know, the underinvestment from the international oil companies of $500 billion in 12 months. That will eat its way into production in between, you know, a dollar invested today, it results in a barrel produced in 3 to 10 years. You also have the shale oil production coming down markedly. This month, the U.S. only produced less than 9 million barrels. They were at 9.5 million barrels only in January. So you see production coming off, and you see consumption going up, which is good for the oil price. Also, when you see what has been depressing the oil price a little bit was a very high dollar, because usually the high dollar results in a low oil price. So if we see the dollar coming down a bit, that will be a good effect as well.
Well, let's just take a step back and put this in some perspective and understand why oil prices are so important. Because oil fuels our economy, as well as cars, ships, trains, planes, but it also reaches into our daily lives in ways we rarely think about. 1 barrel of oil creates around 75 liters of gasoline. The rest, about half, produces many different things. It's in everything from computers to furniture and clothing. It's also in personal products such as toothpaste, shaving cream, and cosmetics. And you may think the only connection that oil has to your car is the petrol you put in the tank. But many car tires are made from synthetic rubber produced from oil. In fact, the average tire is made using around 30 liters of oil. Now, even The roads you drive on use materials made from oil. Asphalt is a semi-solid form of petroleum. And petrochemicals are in food, preservatives, flavorings, and colorings. Vast amounts of oil and gas are also used to make fertilizers and pesticides, and plastic in everything from food packaging to how your smartphone is made, which is from chemicals as well. So that gives you an idea of the kind of impact that what we're talking about right now has on the whole global market. But John, if I could turn back to you on this, I mean, is it necessarily such a bad thing if the price of oil goes down, particularly for consumers, you know, and motorists and so on, and our energy bills, all of that sort of thing?
But I think it's good news, relatively speaking. Of course, it helps when the global economy has been slowing down and there are concerns about the recovery. We are over the IMF meetings in Washington, where there is concern that has been signaled by the IMF about the so-called recovery since the global financial crisis. So low oil prices have helped. But at the same time, there are certain countries like Nigeria, Venezuela, and others that are in near bankruptcy, if not have bankrupted. So that is of concern. And definitely for the Gulf oil states, a post-oil era, I would say, is a good thing. It is good that oil prices have reached $40, $45 a barrel for them to think about their future at a time when they really need to do economic reform. Saudi Arabia has been strategically thinking about these very important questions, especially as a result of what has been stated over the last 3 weeks from the Deputy Crown Prince, Prince Mohammed bin Salman, of a Saudi Arabia that is thinking of its future. And I think this is going to translate within the rest of the Gulf countries, Kuwait, the UAE, and it is important that they're doing it now rather than later. So I think it is an advantage for the consumer countries, but it is also an advantage, low oil prices, for the producing countries to think of themselves after. And I think Saudi Arabia is at the focal point, and it is leading the way in many ways.
Yeah, what's your view on this, Kamil Harami? I mean, what does it say about Saudi Arabia's economic situation right now and its finances, that they are now, or have been for the last couple of months, talking about freezing production? Because in the long run, oil prices at this level, the longer they go on, are not going to be good for Gulf nations like Saudi Arabia, are they?
Yes, that's right. Certainly, yes. And as I will say also that the oil prices, even though it's going to go to the $50 level, but it should maintain, we should maintain a level of between 55 to 60 or maybe perhaps 65, because you don't want to again to alarm or to trigger production of shale oil. Therefore, as you said, we have to take other steps in order not to rely solely on oil. And it is time maybe to think, to really think out of the box. It is time. The Saudis are doing things, the Kuwaitis should do other things. Now it is time to, whether we liquidate, whether we privatize, we have to generate more cash into the country, from our own assets. This is the way it should be done. It's a long process, but however, if oil prices keep at the level of 55, 65, we should be able to manage. And in the meantime, we have to borrow and we have to cash and sell our overseas investment. But however, we have to look at it on long term. I do not see oil prices now reaching the level of 70 or 80 in the very near future, not in the next 5 years, because the threat of shale oil will always be there, whether it is from America and from other countries in the world.
Cornelia Meyer, we mentioned there earlier about how the poorer oil-producing nations like Venezuela and Nigeria are really feeling the pinch here over these continued low oil prices. I mean, they are desperate, aren't they, to get those prices back up to more sustainable levels for them, like over $100 a barrel. I mean, how much of an impact is all of this having on them?
Well, it's having a huge impact. And don't forget Russia either. I mean, Russia's missed sort of a trick in not diversifying its economy more when the going was good and oil prices were so high. Venezuela, with huge subsidies in there, they're really hurting. Nigeria is really hurting. Yes, those are the really hardest hit. But you saw on the other side, on the flip side, that a lot of countries like Indonesia and India got rid of, who are not oil producers, but they got rid of a lot of the subsidies when it hurt less, and so made a better thing, as does Saudi Arabia now. And you see that the Gulf producers, they can go on for quite a bit because they sit on reserves. They also have debt capacity. They're not like Western governments who have so much debt. But you always see when oil prices are low, countries like Saudi Arabia and UAE and so on take the right macroprudential measures. Also, you see that the kingdom, Saudi Arabia and UAE markedly, they're really starting to think of the post-oil era. I just came back from the UAE and every second sentence was the post-oil era.
John, I mean, no one's been talking up to this point. I mean, we're hearing a lot about freezing oil prices, stabilizing the output and so on, but no one is talking seriously about cutting production at this point. Do you think that will change at any time? I mean, why is that?
I think in many ways Saudi Arabia has indicated that what it has been producing since January, which is at the same level as they're producing now, is basically going to be Saudi Arabia's response to a cutting freeze. And so this is what the agreement should look like, of Saudi Arabia producing around 10.4 million barrels a day, as it did in January, and for Russia around 10.9 or thereof. And I think that the most important thing is that there is agreement as to the extent of this freeze, so that we don't see an increase. And most importantly, in the past, we've seen that there has been an agreement, but then a lot of countries have violated this agreement. So the most fundamental issue here is that there is consensus, and secondly, that very few countries, if possible none, actually do not violate this. And Saudi Arabia, I think, has led the way in indicating since January that this is going to be the acceptable level, and this is how it's going to be.
Well, let's talk more about that then. Cornelia Meyer, I saw you nodding to some of what you heard just there. If some of these countries choose to kind of go their own way, there are no enforcement mechanisms here, are there, for anyone to stick to what's agreed in Doha?
Well, no, there aren't. And it's even worse than within OPEC. Within OPEC, we have no real enforcement mechanisms. But there you have the non-OPEC producers as well. But I think, you know, if you look at it, the 10.4 million barrels and the 11 million barrels from Russia, they are really at an all-time high. So this is quite acceptable. And really, I think we, the oil consumers, will at some stage be very grateful for those levels, because you will see the production coming off from the international oil companies and all the people who've been underinvesting. The only people who kept their investment patterns in the industry up were the GCC producers.
One final and quick question to you, Camille El-Harami. Just in the short term, what do you see coming out of these meetings in Doha?
Firstly, we have to agree. You have to agree that the moment we're freezing production, that means we are cutting production. The outcome, I hope, we are in the final minutes. I think it's going to be a communique, positive communique, to pass a positive message to the oil markets, to pass a positive message to the oil prices tomorrow morning in Asia and Europe and America.
Yeah, it'll be certainly very interesting to see what the global markets make of all this when they do open on Monday. Good to have you all with us. We're going to have to bring the discussion to an end here. Thanks very much for being on Inside Story. Kamal El-Harami, Cornelia Meyer, and John Sfakianakis. Thanks very much.
Thank you.
And thank you for watching. As always, you can see the program again anytime by visiting our website, aljazeera.com. And for further discussion, if you're interested, go to our Facebook page. That's facebook.com/AJ Inside Story. You can also join the conversation on Twitter. Our handle, @AJ Inside Story. For me, Hazem Sika, and the whole team here. Bye for now.